Ben diyorum ki tabii baksana Cemil. Var mı geri kabul? Tabii ki. Var mı geri kabul?
there were some matches. One thing we had to speak for practice the you know the boy is not in a then it is until someone went at it, then I think it was a client. He said, but I'm seeing my cat was because akamubuza yamakajara telefoni kwa simu amekoma on my side. That's why I had to put them.
Morning. Good morning, colleagues who are streaming online. Can you hear me?
Morning. Yes, we can hear you.
Are we clear? All right. Good morning once again. I hope we are having a very beautiful Saturday. Today we have a special guest, and is our guest lecturer from Capital Markets Authority. He's called Mr. Norbert Chiza. He's a public education officer at Capital Markets Authority, and he will give you his profile and his background. The intention of this class or this session is to explore the capital markets, one of the most important and examinable areas in financial management papers, both level 1, level 2, and level 3, paper 8 and paper 15. It's a very interesting area, and for those of you who are studying from here, I challenge you that I have never seen a sitting without a question on capital markets and financial markets. Never. So it's very important, and it's a very important question for us to understand. Mr. Chiza here brings insights and real-world experience that will deepen our understanding of how the capital markets operate, their regulatory framework, their relevance to your professional journey, and we look forward to learning from his expertise and gaining valuable education insights from him. He's very practical. There are some of you who don't know Capital Markets Authority. These are the regulators, the people that regulate financial markets in Uganda. So they are the bosses, and it is very important that we get this from the horse's mouth. It is going to be very good for us because they are the ones that give us the guidance. And some of you who may be interested in knowing much about the capital markets, in knowing much about the exchanges in Uganda and how things work, you're free to interact with Mr. Norbert. He's very experienced, and we shall understand what they are doing out there, what they are cooking for us. We also have our questions, I believe, which we shall pose to him. Probably if you've ever heard of capital markets or not heard of it, you may ask why. Because I mean, we are all professionals and we have some little bit of knowledge about capital markets, but how come some of you don't understand this? Those are questions that are going to go to him. So, Mr. Norbert, I welcome you, sir. You can take on.
Thank you so much, Ivan, for that introduction. So good morning, everyone. Good morning, those online, those here physically. I hope I'm audible enough. Yeah, so I'm happy to be here at Capital College to discuss some of the work of the Capital Markets Authority, but also to just speak generally about the capital markets industry and what it does. So my name is Norbert Chiza. I work as a public education officer at the Capital Markets Authority within the Communications and Public Relations Unit. A bit about myself. Previously, before joining the Capital Markets Authority, I was working as a consultant for Equity Group. Equity Group is based in Kenya, but they also have a bit of operations and clients here in Uganda, and I was consulting with them, mostly with training their clients on how to use their trading platforms, but also on understanding the financial markets, especially some of the products that they would offer. Then before then, I worked with the Uganda Retirement Benefits Regulatory Authority, but for a short period, I was working both in the research department, and I also worked in their supervision department. And then I started off work at African Alliance, but I interned there for a period of about 2 years. I was working, it was on rotation. That's with a securities broker called African Alliance. So the last time I studied, I did a Master of Science in Financial Management. That's the most recent something I studied, but I've also been studying a lot of things. I've done a lot of courses just to upskill myself in a lot of things. Some of them are not here. But before then, I also had I did a Bachelor of Science in Finance from MOOBS, from Australia University Business School. So most of the work I do at the authorities really to speak to students, but also to speak to investors, those with an income and those even without an income that are looking to invest in the capital markets. And yeah, so that's pretty much most of the work that I do. It's engagement such as this. So I'm happy to be here with Ivan here at the college, and I'm looking forward to a fruitful discussion. So in terms of what we're going to discuss, there's someone, maybe you need to mute, I don't know. Yeah, in terms of what we're going to discuss, our discussion today is majorly going to focus on, I had a page here on the agenda, I don't know why it disappeared too, but we're going to go through a different number of things. I don't know if I can mute this gentleman. Okay, he has muted, yeah. So let's just, if you know that your mic is on, please, just so that we have a smooth presentation and session, just kindly mute and just keep the mic mute so that we try and manage time. Yeah, so we are going to discuss broadly. This is this is not theory, it's mostly practical, okay? Because most of the terms and the things we are going to discuss as they are, those are the terms that are there as they are in the regulations, and as you see them in the capital markets language discussion, all that. But it's mostly for us to get a practical example. So I'm keeping it really practical so that we can get a real sense of how things work in capital markets. So we're going to discuss many things. First of all, we're going to understand what is the Capital Markets Authority. We'll discuss a bit about that. We shall also look at the structure of the financial markets, all the different players within the financial market space. And then we shall also look at the products. We'll also get an idea of how are these products, exchanged, okay? And also we shall then also look at the different ways of raising money. For some of us, we think when you're raising money as a business or when you want to save, you have to go to the bank, but that's not true. You can actually save or mobilize, income, okay, through the capital markets. And then it's going to be a broad discussion. I think as we go along, we shall be able to see. I had a page on agenda, but I don't know where the page disappeared to, but we shall see as we move along. So I encourage you to take notes so that we are able to discuss later in case you have any questions, in case there's anything you may want to ask. So first of all, let me just explain the word capital and markets so that I can make it as simple as possible for you. How many of us have gone to the foods markets before? These places where Kadere, how many of you have gone to Kadere market, Nakasero market, Nakawa market? Which other market is there? Or we know how many of us, by show of hands, and also those online, you can put up your hand online. How many? We have all gone there. So when you go there, you're going to the market. We all call it a market. The same thing like this, what? Market for what? For the one which we are going to talk about. Only that this one, it's capital market. The other one is a food market. So things to do with capital, raising capital, if it's a business, saving your capital, you do it from what? From capital markets. If it's a food market, you're focusing only on food-related things. Either you are a dealer of food, you are a vendor, a fresh foods vendor, or you're someone who is going to buy the what? The fresh foods. That's when I'm talking about what? The fresh foods market. So that's the only thing to understand about the capital market. And anyone who is dealing within that space, they are either providers of capital, or they are savers of capital, or they are intermediaries. Those that connect you, right? Connect you to buy capital, to save your money, to mobilize income for your money. If it's a business, they will help you maybe to do paperwork for you to raise capital. So anyone that plays a role in the raising of capital or to help you in saving your capital, those are players within the world, within the capital markets. I hope I've made it as simple as possible. Now, let's just dive into those online. If you have any questions, yes, I know that there are also foods markets out of Kampala. Not so. I know there's a Gulu market, Bulu has a market because I've been to it. When I was in Bulu, I bought some things from there. So there are many types of markets even beyond the markets we have here. So let's first understand financial markets in general, the kind of markets that we have. And of course, we're lucky, fortunately, if we're looking at it from a practical look of things, we have each of these markets in Uganda. They are represented here within Uganda. They may not be at the scale that they are at maybe in other regions, but all these markets here are available. We have derivatives right now in Uganda. We shall look at them. We have capital markets also currently. In Uganda, we have the money markets. So in terms of, if you're looking at the introduction to financial markets, it's important to understand what types of markets that are there. So a money market is really a short-term market in nature, okay? Individuals that are involved in the money market are individuals that are looking to have their money mobilize interest, or for them to raise interest or income for their money in the short term using more liquid assets or near cash assets, something that you can actually convert quickly or easily, okay? That could be one, but it could also be maybe you're investing in an asset or in an instrument that is short-term yielding. It matures after a short term, okay? That's where we look in money markets. So money markets, people that invest in them are looking more for liquidity. They are not focused on growth. For them, it's more liquidity, okay? Yeah, there's a difference between the growth aspect to it and then also the stability or preservation aspect to it. So for money markets, it's more liquidity. You're parking your money for the short term to see how you can, maybe if you sold a plot of land and you want your money within a treasury bill that's 90 days, you want to have your money in a treasury bill for 90 days, you look at the money market. If you want maybe your money from your plot of land packed in something much longer, then you're going to look in the capital markets now, okay? Because that one now we're looking at long-term money. Now, we are going to look at the different players on the next page, but let's first understand what kind of markets we are dealing with in this. So the second one we have are the capital markets, the ones I've talked about. Now, capital markets is more an avenue for long-term mobilization of capital, okay? So here, you could be maybe an individual, you're looking more for growth of your income or for your money. The nature of capital markets and most of the products you find within the capital markets arena a product where if you're a business, you're having access to long-term patient capital. And of course, since this is a regulated space, you have the regulator involved. You have also experts, they call them the transaction advisors. Those will help you to continually raise money, okay? If you're a business, maybe like MTN, your company like MTN, and you got listed, we'll look at that at a later stage. You're able to raise money for years. If you look at other countries like the UK, you have companies that have been on the exchange. The London Stock Exchange was first set up in the 18th century, 18 something. There are some companies that have been operating for 99 years, 100 years, and they still have access to money, to capital from fresh investors. People die, other people come, they invest in that company. These people die, other people come, they invest in that company. Some of these companies, I don't know if you know a company called Boots Pharmaceutical. Who has ever heard about that company? I'm sure you've bought that product from that company before, but you're not sure of it probably. They deal in many things and they've been dealing in them for years, you get. But people have invested in that company over years. Even MTN, we are going to leave it here. Other people will come, they'll find it here. And that's the beauty of capital markets. You raise money for the long term. Then you have derivatives. Derivatives markets, in their nature, they are a bit high risk, okay? You have different types of derivatives also. You have ETFs, okay? ETFs, exchange traded funds, those ones are just products that track performance from other products. So for instance, if you have maybe a company like MTN, someone can come and say, I'm going to set up an MTN ETF. So it will get its value from MTN, you get. and it will trade at the value that MTN is trading. That's essentially what a derivative means. A derivative is an instrument that gets its value from an underlying asset. Okay? Yeah, so that's essentially what a derivative is, and we shall look at some of the products within there. Then we look at the financial products. That list goes on, but most of the active products we have in Uganda today, shares is very active. We shall look at them in detail. We have government bonds. Government bonds is when a government is borrowing money from you. And then you have also unit trusts. Unit trusts, just they're open-ended vehicles of saving money. You save money in a unit trust, and you can keep saving money in them for the foreseeable future. So that's how unit trusts operate. And we also have unit trusts here in Uganda. Then again, we spoke about how the main driver for the capital markets or for the financial markets in nature is connecting savers and borrowers, okay? So any money that is coming into any of these markets, okay, is being used by someone else. So if it's a money market and something like a treasury bill, whoever is investing in a treasury bill, that money is going to a purpose. That's government. Government is going to use that money for its own purposes. If it's maybe a share, you're buying a share of MTN, MTN is going to use that money. They can use it maybe to increase, probably maybe set up a new branch, whatever it is that MTN does. We know it's business. Invest in data, it could be maybe for infrastructure, depending, or it could be maybe just for their working capital within the business. They know how they will use that money, okay? But all the money that you're using to buy a share, that's where it goes to, okay? For that particular purpose. Yeah, so let's move forward. So now the structure of Uganda's financial markets is like this. You have the key regulators. So you have Bank of Uganda, which is focused on monetary policy. Bank of Uganda and the capital markets, they are both regulators, okay? The Bank of Uganda, for it regulates the banking industry. Anyone that's operating within the banking industry. But not only that, I think even SACCOs are regulated. SACCOs, I think, that have capital, I think 500 million and above, they have now gone under the space of Bank of Uganda. Then you have the capital markets industry. That one is regulated by the capital markets. Then you have IRA, okay? Who can tell me what IRA is in full? Insurance Regulatory Authority. Yes, that one is focused on insurance. So some people tend to confuse the work of CM and IRA. When we go on some of these engagements, you find people coming to us complaining about their insurance related, maybe scam and all this. But that's, you're talking to a separate regulator. You're supposed to be talking to what? To Insurance Regulatory Authority. So it's important to understand that. Then you have where NSSF is. Anyone knows NSSF? Who regulates NSSF? Who can tell us? NSSF. NSSF is regulated by the Uganda Retirement Benefits Regulatory Authority. That one now is for pensions, retirement money. Okay? That is the regulator. Okay? It's called UBRA. Okay? I think probably maybe you've not heard of UBRA before, but it's there. Right? Then you also have other regulators. You have the FIA, Financial Intelligence Authority. Anyone who has heard about it before? What does it do, sir? You've mentioned, what does it do? Financial Intelligence Authority. Its work is very simple. Within that word in financial intelligence, they are focused on getting information, okay? That, intelligence, right? Intelligence, that's just like you've heard in the word intelligence. What's intelligence? Intelligence is not that word of being smart, no. Intelligence is actually getting any vital information that could be in the arena of money laundering, okay? And terrorism financing, so they focus on that, right? So they have certain statutes they follow, and they ensure that in the transactions, the capital market transactions, the retirement benefit transactions, the insurance transactions, there's no one who is trying to layer money inside those places. Someone can enter Uganda with $5 million somewhere, and they want to, Now let me tell you usually how it works. They'll get $5 million. I'll just speak briefly about this. When it comes to things of, just help us close that door. I don't know if it can close completely. You know, in terms of money laundering, they call them, I don't know, they call them responsible parties. I think they call them responsible parties. So they are supposed to report any suspicious what? Transaction. Someone can enter Uganda and they deposit money on a individual pension account, maybe for Octagon. Octagon is a company that you can invest, you can use to save your pension money. And then after investing the money there, the next day they are what? They are trying to withdraw it. Now that one is flagged. Where you depositing money and immediately you're what? Withdrawing. You want to, there's a process they use in money laundering. You're trying, I think, to layer it. You want to keep the money there so that it's not as suspicious, or you're trying to hide the money within that one. And there are also many other ways. Even some people launder money through restaurants. You get. So all those are responsible parties, and the FIA is in charge of ensuring that they do not allow those money launderers to operate within what? Within Uganda. But for most, they like financial products. Why? Because they are not only able to put the money there, but they can also get income from the what? That's why FIA is always keeping an eye. And it works along with CMA, it works with Bank of Uganda, it works with IRA, it works with UBRA, because there are many places where they can what? Hide that money. Okay? So now we move to the financial institution tier. So we have from tier 1 to tier 4, but I think it's important to focus maybe on tier 1, because on tier 1, that's where most of us are involved. But even microfinance, I'm sure some of you may be investing in microfinance institutions and circles and all those, but those are also part of the structure. Then we move to the capital markets infrastructure. What drives it, right? So you have exchanges, you have the primary exchange in Uganda, the Uganda Securities Exchange, okay? And on there you have equities traded, the shares, we'll talk about that. UBRA in full is Uganda Retirement Benefits Regulatory Authority, okay? You can even type there in your phone, UBRA Uganda, you will see it will come up, okay? Then you have Altex. Altex, they have a product called the Tolea ETF. Tolea ETF is an ETF that focuses on bonds. Okay, we'll also discuss that, right? That Tolea ETF. But also you have cross-border. Okay, some companies are in Kenya, but you can buy them from Uganda. You get those ones now. Those are shares. You can buy shares that are from Kenya. You buy them from Uganda. So that's cross-border. Then you have the CDS, the Central Depository. We shall talk about that. The Central Depository System. For that one, it's mostly for dealing in bonds, and yeah, and we shall see how it operates. So market participants, you have government. Government is looking for money. How does it access the money? Through this financial market. You have companies, okay, corporates, those are companies. Then you have intermediaries. Intermediaries, I said, who can remind me what intermediaries are? I said it earlier. What do they do? There's a keyword there, broker. Anyone who has dealt with a broker before? What do brokers do? Exactly. So that word intermediary is just a big word to mean what? Brokers. You get, yeah. Then you have advisors. This could be investment advisors. You have transaction advisors. Transaction advisors focus on the capital markets transactions. If it's maybe when a company wants to offer shares to you, they need a transaction advisor to do for them the documentation, to deal with the authority, to check their documents. Are they in line with the what? With the regulation, things like that. That's what the transaction advisors do. Then you have other financial segments, insurance providers. We know the insurance providers, not so? Who can mention one of them? A company. ICA, Prudential, all those companies, you know them. Pension schemes, NSSF. Which other pension scheme do we have in Uganda? Who can mention it? Aside from NSSF. That is now homework for you. I'm not going to tell you. Microfinance institutions, okay. Then we have the sovereign wealth fund. Most of you do not know about the sovereign wealth fund, and we shall look at something interesting about that, Okay, the sovereign wealth fund that is managed by Bank of Uganda. Okay, Bank of Uganda, they manage your revenue that's going to come from the oil. Okay, and the Hoima Stadium, the one that was set up by, with some of that money, and we shall look at it on a separate page. So the biggest pension fund in the world right now is a sovereign wealth fund. Okay, the biggest pension fund, it's a Norwegian fund, the biggest. I think it's must be in trillions, I think, of USD. And yeah, that's where we also want our wealth fund to go. Sovereign wealth fund is for Ugandans. It is a national what? Fund. Your money is here, you get. That's why it's important for you to know that there's that fund. And it's from your money. That money is not for anyone in government, the money from the oil. It is for Ugandans, you get. Yeah. So the Act and the regulations. So we have many regulations that govern the capital markets. First one is the Capital Markets Act. That's the first and most important, okay? And it's the primary and most important document that we use. So everything ties back to the Act. When we are writing documents to intermediaries or to the brokers, we tie back to the Act, and it's the primary piece of document that we use in all our different, back and forth with our players in the markets. Then we have the offer of securities regulations. Those ones are for offering securities. It can be maybe a public offer. We go back to the offer of securities regulations. It can be maybe if someone wants to issue a commercial paper, a corporate bond, we look at some of the requirements for that. It ties back to this. Anything in regards to offer of securities, that is the key document. Please, those online, please mute. Please mute. Then you have the USE listing rules. Okay, when a company is going to be part of the exchange, it has to follow the rules. These rules here, and those are for the Uganda Securities Exchange. Okay. When I talk about listing, that word listing is not writing a list, a shopping list. That word listing is just getting onto the exchange, becoming a what? A public company. The process of a company becoming public, we call that the process of what? Listing. Okay? So there are rules that govern that process, and those are the USE rules. Then you have the book building regulations. I just spoke with your lecturer earlier about this regulation. Book building is when a company is going to become public. Okay, what price should the public buy that company at? That is a question now. Okay, how can a company go to the public and say we're now going to sell MTN at 1,000 shillings? Is it fair? Most likely not, because they didn't do research before finding out which is the ideal price for Ugandans to actually show interest in buying that company. Could be maybe 150 shillings would have been ideal for Ugandans to buy many shares. So what do? They are supposed to come up and get price estimates from individual investors, from institutions, and then they will do in that process is called price discovery. When that process is concluded, we shall have a final offer price. That is the final price whereby if you check online and say, if you check it, when was MTN listed? 2021? I think 2021. So when MTN comes and say, hey, look here, you can now buy a share in MTN at the offer price of 200 shillings. That final price, these are the regulations that what determine it. So they have to follow those procedures within those regulations. Then you have the takeover and mergers. As we know, in the arena, especially like if you look at some of the developed countries, we have companies taking over other companies, okay? And this could be cross-cutting, maybe from one sector to another, but most times mergers, for the purpose of merger, it's normally related companies. I know right now, how many of us know a company called Netflix? Some of you, I'm sure you even watch movies on Netflix, right? Yes, so Netflix has shown interest in taking over another company called Warner Bros. Who knows Warner Bros? Most of the movies that you watch, that Warner Bros normally appears there, okay? But Warner Bros has the rights to many movies, mostly If you watch these movies, the Marvel movies, the ones that have Iron Man, Spider-Man, you know those movies, Warner Bros. Owns those rights. So before even they have been warning people that have been making AI videos. There's a Chinese company which was warned recently, altering videos. Those AI videos of Spider-Man fighting Jackie Chan, Spider-Man fighting Arnold Schwarzenegger. They have been warning and saying, don't do that. You can't alter their what? But they use the video which they have been altering has been from their movies. You get in the US, if you download those movies without paying, they can arrest you. You get, so that's how those rights are very important. You have to buy. It's like, for instance, if maybe I take that handbag there, I don't have whatever to that handbag. I don't have the rights to it. So you have to pay for the rights. That's what happens with what? Now with mergers, we have not been having mergers generally in Uganda, but in the outside world, like recently, Netflix wants to take over Warner Bros. Which means when you buy Netflix, when you subscribe to Netflix, you'll be able to watch Spider-Man, to watch Iron Man, all those movies through Netflix. But now to get them, I know for most of you go online and download, even me, it's faster. Download, then you just watch. But it's actually illegal to do that. You're supposed to what? To purchase them through the right channels. Yeah. Then you have corporate governance. Corporate governance regulations. Corporate governance regulations have more to do with how the company, how those brokers I told you, the brokers, the companies that connect savers to borrowers. Okay, how do they operate, right? But also the management of those companies, how do they operate? That's corporate governance now, right? When a director is stepping down, another one takes over. The one that takes over, what experience do they have? And all these different things. It ties back to what? To regulations. But also when a company wants to come to the public and raise money from the public, when they are assessing the experience of the top management, they look into the what? Corporate governance. And they track it, they test the potential of the company based on those regulations. Then there, because now I can't. Okay, it's now back. So I need to share my screen. So we're talking about the investor compensation fund. So for the investor compensation fund, what we are saying is, in case a broker closes, okay, the public are supposed to be refunded through that investor compensation fund. So how the fund is managed by the authority, and yeah. Okay. Okay. So anything that's connected to the investor compensation fund, whether it is how the fund is managed, whether it is how the contributions are made to the fund, those are the regulations that tie to that. So now these people are missing out on that slide, but I'm just going to read you. Just take the statistics. How much money has been raised in the capital markets to date? It's about 2 trillion. Okay, that is through primary and secondary markets. Now let me just say something briefly about that. The primary and secondary market. So when we say primary market, we are talking about where companies initially come to raise money from the what? From the public. Okay, just write that down as it is. When a company initially comes to raise money from the public, a public company, when it becomes a public company by law, okay, then it's that process, and where the market where it does that is the what? The primary market. Okay. Now, the secondary market, when that company wants to raise money again, it does it through different ways, and it does it through the what? The secondary market, okay? So it could be maybe if it wants to do a bonus issue. Bonus issue is maybe if it wants to raise money again, and it wants to issue fresh shares, okay? It will do that through the secondary market, okay? But even other things like corporate bonds is when a company wants to raise debt, okay, we shall look at that. It's different from equity. Equity, you are a shareholder. But corporate bond, you become almost like a what? If you owe someone money, if someone owes you money, who are you? Are you a creditor or a debtor? You can tell us. You guys are not sure. You'd have already answered. If someone owes you money, yes, you are what?
Creditor.
Then we have collective investment schemes. The amount of money right now in collective investment schemes as of 2025, now we're about to hit 5 trillion now on collective investment schemes. This is 2025 data. Collective investment schemes, the money that has been collected in those schemes, and this is money invested in bonds, invested in shares, invested in treasury bills. It's approaching about 5 trillion now. As of 2025, 4.2 trillion. That's March 2020, that's all data. Then you have market cap. Market cap is the number of shares that are currently held by the public, okay? So those number of shares held multiplied by the value of those shares. In UGX, that's the market what? Cap. You're looking at about 14 trillion, which is about 9.1% of Uganda's GDP, okay? So which means capital is up to the country or to the economy, okay? So key market players, let me just go through this again. So you have the Capital Markets Authority. Now the Capital Markets Authority is the regulator of capital markets in Uganda. It's in charge of regulating the key and primary mandate of the capital markets to regulate. Then we develop and then we promote. What? Uganda. The Capital Markets Authority was set up in 1996 by an act of what? Of Parliament. And it was set up with the primary mandate of regulating, ensuring that there is order in the capital markets. Otherwise, if there is no CMA, if there's no Capital Markets Authority, people do what they want. There's a regulator in place, okay? And then you have the Uganda Securities Exchange, okay? This is the primary exchange in Uganda. You also have the Altex. Altex is not here, but it's also another exchange. And on Altex, you're able to trade bonds, okay? On Altex, you can also trade what they call the Tulea ETF. Write it down. Tulea ETF, I'm just going to briefly speak about it. The Tulea ETF works like this, very simply. If you do not want to buy bonds directly through a central bank, you invest in an ETF, a Tulea ETF. How does it work? If you invest 100,000 shillings in a Tulea ETF today, okay, you're going to invest at a particular price. That is the price of the ETF. And that price keeps changing. Call it the net asset value of the what? Of the ETF. It keeps changing. So if it increases by 4.6% within 2 months, it means that your 100,000 has increased by how much? By how much? I just mentioned the percentage. 4.6 what? Percent. So for it, it's based on net asset value. That's how the ETF works. When it increases, your capital also what? Increases. That's a two-layer ETF. So as opposed to having, should I repeat that? Yeah, let me repeat it. When you're investing in an ETF, okay, that is for Altex. Your investment is tied to the net asset value of that what? ETF, right? So if the net asset value increases by 4.6%, or maybe by 5%, whatever percentage it increases by, even your capital what? Increases, okay? So it's structured in such a way that you don't have to invest in a bond directly. You can go through an ETF, and then that ETF, there are many bonds there. They have been placed there. When the bonds mature, other bonds are placed there, okay? And that's usually how the ETFs operate around the world. That's typically how they what? They operate, okay? Just very simply. Then you have the central depository system. That system, we are going to look at it step by step, see how it operates. And then you have the SCD, that is Securities Central Depository. So one of them is for bonds, that is the one that has CDS. CDS, that one is for bonds, for government bonds and what? Treasury bills. Then the SCD, that one is for what? Shares. When you buy shares, that's where your shares are what? Are kept, okay? Are we clear, guys? You seem not certain. So you see like how you have a bank account where money is kept. So this is just a bank account. One is for shares, the other is for what? For bonds, okay? So the Securities Central Depository is the bank account for what? Shares. When you buy a share, immediately your name is recorded there with your shares, with the date you bought them, and the value of those what? Shares. For a CDS, when you buy a bond today, it will also indicate there, so and so bought a bond with this maturity, with this value, okay? It will immediately be recorded in the what? In the system. So the bank account is for what? Money. The other one is for what? Shares and what? Bonds. Then you have the government of Uganda. Government of Uganda is they call them issuers. Issuers is just a technical term within the capital markets. Anyone that is selling products to you, like let's first go back to our example, Kalere market. Remember Kalere market? When someone is selling tomatoes, cabbages, all these things, that's an issuer, okay? They are issuing to you tomatoes. Guys, we are here. We are talking about issuing or giving you, okay? Someone who's giving you tomatoes, giving you cabbages, giving you onions is the what? The issuer, okay? Now, in the arena of the food markets, they are giving you onions, tomatoes, cabbages, apples, all that. But in the arena of capital markets, we have the government. It is government doesn't issue shares. Shares are issued by companies like the MTNs, the Airtel, all those. Okay, those are the issuers of those instruments. Okay. Now the MTNs and Airtel, Stanbic, all those companies, they fall in this category. Corporate issuers. Okay. Companies issuing securities for capital raising. But if Kafira Sugar Works wanted to raise money, it can also issue a what? A bond. We call it a what? A corporate bond. Okay? So which means it's not only tied to shares, it can even issue a what? A corporate bond. Are we clear? Have we understood that page? Any question? Those online, any question? Okay. The rain is going to make noise. Okay, let's proceed. So the role of capital markets in economic development. This rain is going to make noise. I hope. Okay. It's fine. Eh? Okay. So first thing we have is facilitating long-term financing for governments and companies. Okay. In a developed markets, Our government here in Uganda, most of them they borrow. Okay, not most of them. We have one government. The government we have in Uganda, it borrows money. Okay, it borrows money from China. It gets into debt arrangements with the EU. It shouldn't be doing that. It should come to the what? The capital markets to raise what? Money. Okay. Now, let me give you an example before I come to the Hoima Stadium. In the US, they have what they call the Wells Fargo Arena. Okay. The Wells Fargo Arena is used for many things. It's used for concerts, okay, like music concerts. It's also used for ice hockey. You know ice hockey? Yes. But it can also be used for other things. It can even be used for exhibitions. It can be ways that the management of that stadium, of that arena can what? Can raise money. Okay? So the capital markets, when Wells Fargo is a bank, okay, it's a bank in the US. If Wells Fargo wanted to raise money, it doesn't have a development partner to raise money. Or maybe do a syndicated loan. It can come to the capital markets in the US, raise money, and then set up a stadium. Okay. Now, this stadium here, they didn't set it up using money that was borrowed. Okay. This stadium was set up using oil money. You get this stadium here, you see, fully funded by what? Government of Uganda. But it was set up with a purpose of whatever money comes from, the money which comes from oil, okay, is going to be used in this stadium. It's also using oil money. You get it? And it's going to be set up that very different accounts for me. When you go to what? Believe that the sovereign fund is yours, because I think anyway, I hope we don't have no confidence in the government. They should be happy. They may not hand you the money and say, as a citizen, this is your money. You can get it through infrastructure. Those are ways that the government what incentivize you. It gives back to you. It may not give you handouts. In the US, they give handouts. Like in COVID. In COVID, the government gave how much? How much the government gave? Who remembers? The government gave the staff. Okay. So it's possible. Let's hope that even they can give us cash. But it may not going to give us as citizens of Uganda. No. It can be 1M. Probably like 250,000 shillings per Ugandan. Because remember, they don't look at you with and they look at you with one. There are people who even 1,000 shillings. What? So 250,000 shillings will make a big difference for them. That's all. So
Sir, you are breaking.
it's going to be used for many things. Okay? It's going to be used
You
for
are breaking.
matches. Not so. We have AFCON coming up. The tickets of AFCON, where's the money going to go to? The Sovereign Wealth Fund. Okay. When you hire for concerts, that money is going to go to the what? The Sovereign Wealth Fund. Now, if government wants to set up another stadium like this, where will it come to? Capital markets. It's possible in our capital markets to get raised what? This money. In developed countries, that's what they are doing. They don't have to money. They just come to the what? The capital markets. Okay. Then, naming rights. Who knows what that is? Look at you. If, for instance, which are the biggest companies that want to be? You have Apple. Who knows Apple? Apple. The guys that make the iPhone. There's a company
Sir, we can't hear you.
it paid a lot of money so that they can
We
brand
can't hear you.
that stadium. Oh, someone is saying they can't hear us. They paid just such about the crypto arena in the US. You'll be able to see. So crypto.com came and said we are going to pay you guys this amount of money to use our name on the stadium for those years. So which means when someone goes to the stadium, they see the what? They see the what? They see the name of the company, and then they will be forced to do what? To do business with that company. So there are many ways. I don't know whether the government of Uganda is looking for someone to brand it. As of now, it is called what? Oima Stadium. But someone will come and say, Apple. If Apple comes and pays the government for 20 years, maybe how much? 300 million, can be $300 million. Apple is very rich. Can even pay maybe $500 million. And that money will go where? And here they will now change. There will be an Apple logo. They will do whatever they want, but after those years elapse, then it goes back to what? It will go back to Emerson Stadium. So those are the ways government can work. So government now has said they said they want to set up a stadium in Mbarara. That's why no, an airport. They don't have to borrow money from China. They just come to capital market. They issue them a corporate bond. Then they raise the money, and then they will be able to what? To fund that activity. Okay, so that's possible with the capital markets. Now you also have other things like share ownership for Ugandans. Most of the companies that we have on the exchange right now are there simply because government says okay, we need money. What can we do to get money? Let's sell our ownership in the what? In the new business. So that Ugandans can what? And benefit. So there are two benefits. When government sells ownership in a company, that you own part of that company, if that company increases in value later, you're going to benefit as a Uganda, not so. Because you're going to have, if you bought that company at 100 shillings, and the value of that company goes to 500 shillings, you're going to make 400% return, okay? But what else are you going to benefit from? There's also that national pride that you're owning shares in MTN. Okay? You're owning shares in a Ugandan company because it may seem like something small, but you are Ugandan, you're benefiting. The company shouldn't be making profit when for you're not what? Benefiting. And yet these companies make a lot of profit. The companies we have on our exchange, they are the top taxpayers at the URA. You get it, eh? And that money is your money. You're giving them, each time you buy airtime, I don't know, each time you buy MTN Airtel, MTN Airtel, you're benefiting. So it's important for you to benefit. Then we have corporate governance and accounting standards. We talked about the corporate governance regulations. Through those regulations, we ensure that every capital markets transaction is done according to the what? According to the regulations. But also we look at the requirements, the accounting standards. When a company comes and says it wants to issue you shares, they need to have audited financial statements for the past 5 years. But also the way they report, their reporting is different. Those reports, the integrated reports for MTN, you're going to see. They are very different. You get it? Their reports are bulky. Why? They are bulky because they have to report every important thing, everything that they have been doing. And they do that because of what I've told you. There's something else missing there on transparency. They have to be transparent. They report everything that they have done through the year. Shareholders need to know. Okay? Yeah. So that's why you find at these awards, the FIRE awards, the financial reporting awards, normally you find those companies, normally they're the ones that are winning the awards. Stand Big, MTN, because they are public companies. So they are whatever is very tight on them. The way they regulate them, they have to report everything. The accountants have to make sure they do a thorough job with how they report and how they produce those integrated reports. So now we are going to go to the securities exchange operations. So here, very briefly, we just have to understand the number and the fact that the side is not, the sides are not okay. Now it has changed. Yeah. So this process here, oh, this is the page. Is the what? Okay, yeah. This process here is this way that I wanted to. The Securities Exchange, the Uganda Securities Exchange, how does it operate? It operates in such a way that we have what we call sponsored market access. Okay, sponsored market access is where when you're buying shares, right now in Uganda, you can't buy shares directly. You can't go to the exchange and okay, you can if you're buying bonds, but not shares. If you're buying bonds, you can use the Easy Portal. There's the Uganda Securities Exchange Easy Portal. You go there, you buy bonds, and your bonds will be settled. You'll be able to access those bonds. Now, guys, I currently kindly urge you take notes or take pictures because I'm not going to share this presentation. Unfortunately, yes. So take pictures, and it's not because I don't want to, but it can't be shared. It's a web-based presentation, so you need to take pictures. It can't be shared, unfortunately. So, when you're buying government bonds and treasury bills in Uganda, you can buy them through the Uganda Securities Exchange. Easy what? Just repeat that. The easy what? The Easy Portal. Okay. Then, when you're buying shares, you have to do it through what we call sponsored market access. What does that mean? You're buying the shares through a licensed what? Broker. Okay? There are two types of market access in theory. You have the sponsored market access. Okay? Let's repeat that. The sponsored market what? Access. And then you have the direct what? Market access. So right now, direct market access is there for government bonds and treasury bills. Okay, but even with those, yes, you can trade them on the exchange. But even with those, no, with the shares, you go through a broker. But with government bonds and T-bills, you can go through the Uganda Securities Exchange. Okay, so okay, this slide, yeah. So how does the process work? Now, first leave the slide because I want to take it. I want to show you a real world. This is just notes. Okay. So when you're buying shares, what happens? Just let's understand from here. This is the slide. Okay. When you're buying shares, you need a licensed broker. Okay. Right now we have about, I think there are about 10 brokers. We have two things. We have a broker and we have a broker dealer. A broker works only on behalf of the what? The public. When they're helping you to buy and sell shares, not on their own behalf. In the capital markets, when you talk about a dealer, dealers trade on your behalf and their own behalf. So they use their money and yours. You get it? Those are broker dealers. They are different from brokers. Okay. So if you want to buy a share in MTN today, what is the process like? I just want to tell you so that you understand easily. We will come to the slides. First thing is this. You have to open up a bank account. Okay? When you have a bank account, I know we all have bank accounts. If you don't have, you have to open up a bank account. So when you have a bank account, you're going to go to the licensed broker, right? When you get the licensed broker, you will then go through what they call KYC. KYC is know your client, okay? And that is done because they have to ensure that they are sharing that information with the exchange, but it's also for purposes of FIA to monitor. It's cross-cutting the regulations. The regulations for CMA, regulations for FIA, but even just general best practice. So the broker will tell you deposit money on their operational account. And that account will be in the names of the broker. So the brokers we have Crested Capital, you will see the list. We have Old Mutual. Who knows Old Mutual? Not UAP. They are no longer called UAP. Some people keep calling them UAP. UAP moved away. It's now what? Old Mutual. Yes. So you go to them, open up do the KYC, and then you'll open up what you call the other account, the one I told you about. Who remembers it? The one for shares. The one for shares. We talked about the bank account for shares. SCD, exactly. Thank you. You'll open up that one, that account. Then after opening up that account with them, you will then decide and say, I want to buy MTN shares. Okay? Now, Just for purposes and even to give you some advice. When you're buying shares, don't buy in hearsay. When you're buying shares, you need to buy using the advice of a licensed investment advisor. Okay? It's not me. I'm not a licensed, I don't have a license to give investment advice. For me, I'm purely an educator. Okay? So you need someone to advise you. I think that the screen has been shared. We shall come to the slides. Let's first have a discussion. Okay? Because this can't be put in slides. This is the actual real world case of how, because I want to work the entire process to understand how it works. So after depositing money on their bank account, you will then get to the process of buying the shares. So there are different types of market orders for buying shares. Okay, market orders are buying and selling what? Shares. When you send a market order to your broker, it is an instruction for them to act on your behalf to buy and sell what? Shares. Is that clear? The market order. But the market order is real time. You're telling them that I want to buy MTN shares at the current what? Market. When you say market price, you are meaning the what? Current price. So in Uganda today, when you're buying and selling shares on market orders, you can either fill them, you can either go to the broker's office to do that, or you can do it through email. So you'll send an email and say, hello, Preston Capital. I have an SCD account number this, and I would like you to place an order of 5,000 shares of MTN at the market price. Please respond with a confirmation, okay? That's usually how it is on email. But even on phone you can. If you've got some of these movies like Wall Street, look for that movie. Those guys, they make orders through the phone. They call the broker. Can you please place for me a market order of 5,000 shares of MTN at this price? The broker will say, let me get back to you. They'll call them back and say, filled. And then they will send the confirmation to their email. That's what normally happens with market orders. But you don't only have market orders. You might go to an investment advisor. The investment advisor says, look here, MTN is trading at 400 shillings, but it's expensive. Okay? So they'll tell your broker, okay, to buy for you or to fill in for you what you call a limit order. Okay? So limit orders are whereby you're telling, so we have two types of limit orders. You have the sell limit order and you have the buy limit order. So we have the market order, we have finished that one. You're buying at the current what? Price. How do you fill that to the Uganda Securities Exchange? Either through email, through phone, or you go to the office. The office is normally the most what? You don't have to go to the office. Just what? Call or do an email. Now with limit orders, there is an extra layer of instruction to your broker. You're telling them that you want them to buy below the market price, okay? But when they're buying below the market price, they are buying not beyond a certain what? Price. That's why there's a limit, okay? So if they buy below that price, then they are not filling your limit. There's a limit. Then for sell limit, you're telling them to sell, but to sell only at this particular price and above. If it goes below that price, then you're not interested. And the purpose of the sale is because you want to lock in a particular what? Price. That's how those limit orders work. Should I repeat myself? With a buy limit, you want them to buy at that price and below. Okay. If it goes above it, it becomes more expensive. The beauty is that you want to buy it at when the prices are better when you buy them cheaper. You get it? Eh? Prices are better when you're selling them higher. The moment they become less expensive, then you're not making what? You're not getting more value. If MTN was at 500 shillings and you set a limit for 600 shillings, your interest is not now what? 500 shillings. Your interest was 600, that's what the limit was. It became cheaper, whereby you would have made maybe more profit at selling it at 600 after buying at 100. You're now making less because it has become what? Cheaper. We have understood that, guys. Eh? Sell limit, this price and above. Buy limit, this price and below. We are better buying when it's cheaper. We are better selling when it's what? Higher. Yeah, those are the limit orders. So you can put that instruction. You say, hello, Crested Capital, hello, Old Mutual. I would like to set a limit order for you to buy me MTN Uganda shares, maybe 5,000 MTN Uganda shares at a price of 120 shillings and below. If it goes above 120, I'm not interested. Now, remember when you're selling that limit order, you're supposed to use an investment advisor. You don't just look at the chart and say 200 shillings, let me send. No. The investment advisor, those guys, they monitor the charts. They will be able to show you this is a good price to buy. You get the moment you buy above, it's what? It's going to sell because you bought it was expensive. That's how the limit orders work. Is that clear? So now I've done that email of the market order. What happens? The order will go through to the broker. Okay. So we have the systems. We're going to look at the automatic trading systems ahead. These guys use a system when they're trading. Okay. So the broker will collect all your orders. Maybe in this room there are a total of 60,000 shares to be bought at 200 shillings. 50,000 shares to be bought at how much? 500 shillings, like that. So the broker will collect them. Those are now limit orders. Then there are those of market order. Market order, the broker will get your orders like this and go and fill them in. They enter on the system. This amount of shares at this price, it goes through. Then we have what we call matching. Okay. Matching is where if maybe actually what I'm talking about is already here. So I thought I haven't kept track of some of the slides, so I got the slides and whatever, but they are there. So when your orders go to the system, okay, the trading right now in Uganda is automated. Then it used to be people in a room like this. They would stand with red jackets and then they would write and say 5,000 shares, they want them bought at this price. 6,000 shares, they want them sold at this price. 2,000 shares, they want them sold at this price and above. 2,000 shares, they want them bought at this price and below. That's how normally they'll write them. But now it's a system. So now we talk about matching. So the matching is whereby when the broker has sent through 50,000 shares of MTN to be bought at a price of 250 shillings, immediately there's someone who wants to buy MTN at how much? 250 what? Shillings. And immediately in the system, it's what? It's automatically matched. Okay. So if a broker sends in, if Crested Capital sends in the total orders of Ugandans that want to buy shares of MTN and Airtel, and there is no matching order on the other side, okay, there's no matching offer on the other side for someone to buy because you bid and another person offers. You've bidded 5,000 shares, this person one is saying, me, I'm going to offer you, but at what? This price. That one becomes a what? A pending what? You write it down. If there's no matching, then it's a what? A pending order. So until someone is willing to buy at that price, it stays pending in the what? The system. Okay? That's how the securities exchange works in Uganda. So when a transaction has been fully completed, we have what we call a contract note. Okay? Contract notes are issued. Okay? Guys, I would discourage you from writing. It's better to understand it as I'm dictating. Otherwise, it will be easier for you when you're being examined. Yeah, because you write as it is. Don't try and cram the things on our. That's why I wanted to discuss them with you, whatever. Yeah. So a contract note is issued after the completion of a matched order. The process of orders being matched in a system, we call them filling. That's the what? The term. A filled order, the broker will get back to you by email and say, dear Charles, your market order of 3,000 shares was successfully filled in the system. Here is the contract what? The contract note. Okay? Contract note things. Contract note is attached here. Okay? That's what happens in the the placement of what? Of orders. So any question? Any question? Is that process clear? It's clear. So who can tell us? Tell us what the first step is in the trading operation process. I want the entire process to be completed by each of you. I want to randomly pick. So tell us the first step. I want to invest in shares in Uganda. Where do I start?
Excuse me, sir.
Proceed. What account is it? Account is ambiguous. Tell us exactly what the account is and what it's for. STD account in full is Securities Central. It's okay. Securities Central Depository. Okay. The STD account. So, yes, sir. After opening up the account, walk us through the next step. You go to the broker. You deposit the money in the broker's operational account. Yeah. You don't have to deposit an exact amount that you want to use to buy shares. You can have money there, and on their statement, this money is tied to you. So the money will keep reducing from the operational account, and it's increasing in terms of shares on the STD account. You deposited 4 million. Now your 4 million has reduced to 2 million with the broker, but you have shares worth how much? 2 million. But your shares, your initial was 4 million. There's 2 million on the broker's operational account, but your 2 million, which you used to buy shares, your shares have now increased to what? 3 million. So you have 1 million in profit, 2 million in operational account for buying more shares. It's up to you. Okay? That's how it works. So, what happens now? You deposit money in the broker's operational account. Then what happens next? Yes, still you. What happens next? After depositing, what happens? Yes? You submit the order, either through phone call, email, or you can go to the office and you will fill. There's a form they will give you to fill. Okay? Some people prefer to go to the office because maybe it's convenient for them. Some people are close in town, they'll go to the office and they fill. Yeah. Then after sending through the order, you specify the type of order, market order, limit order. Yeah, and then you send them through. Okay. So let's just go back to securities exchange operations. So this process that we went through was the trading operations map. Okay. Someone online asked, how do I know who is licensed and who is not? You can access the list of the licensed brokers on the CMA website. Okay. We have brokers and we have broker dealers. A broker is someone who acts on your behalf. The CMA doesn't allow them to trade for themselves. They act on behalf of the public. But then broker dealers, they can trade for you, but they can also trade for themselves. Those are broker dealers. Okay? Yeah. So let's just go back to this slide here. So generally, trading operations at the USP, the process that I'm talking about is the what? Buying and selling what? Shares. We have not gone to the bonds. This is still what? Shares. You buy them through the what? Uganda Securities Exchange. Okay. If it's pending, it stays pending until it's what? Filled. Filled is when the order is matched. It can be matched but not filled. Remember, it's a what? A system. The system can have an error. That's why they do even audits on the system. It's not completed until it's what? Filled. Matched is when someone is willing or there's an offer at your price, but it has to be matched and then filled. That's why in the old trading of the exchange, they would say filled. They would use signs filled, like that, filled. You get? Yeah. And then the person who is recording the registry is taking note to the person that said filled. Unless they hear the word filled, the order is not completed. You can have an order, someone is willing to match your order, but when they have maybe turned around and they have now whatever they what, maybe another order. So, yes, so previously it was, they used to write on a board, but now it's what? They're using the system, that's what they use. So the system ensures efficient and transparent market activity. Brokers manage order execution. I just gave you the example of the orders. There are compliance checks. Obviously, like I said, they have to, as a responsible party within the money laundering, they have to make sure they record source of funds, where you're getting your money from. Someone can get 50 million shillings and it's from money laundering. They want to buy MTN shares. So they have to track source of funds and all the KYC. They do that with the purpose of what? Keeping records. Then you have the CSD, which I look at that. That's for bonds. Its process is ahead. Then settlement. Settlement is a process whereby when you've sold your shares, that money goes to the operational account of the broker, and then a broker will have to wire transfer you that money to your account. Okay. Remember, it's on you're the one who decides. Yes, when you sell your shares, the money is going to go to you. Okay, but there will be a fee. You have to write that there. There's a 2.1% fee. Okay, on every transaction. When you're buying or when you're selling shares, there's a 2.1% fee. That fee is broken down. Part of it goes to the USD. I think about 0.05% goes to the CMA. Okay, because the CMA, it has money is collected from us that goes to what? The consolidated fund for Uganda. You know, we collect penalty money. We charge people penalties for disobeying the law. Okay. We also get fees, license fees. That's how the CMA gets money. Then we also get fees from every transaction. When a person transacts on exchange, some of that money comes to what? The CMA. Then that money goes, no, then from the CMA, it goes straight to that fund, consolidated fund. Okay. So, sponsored market access, that is when you're going through brokers. Okay. When you're going through brokers, we call it sponsored market access. Direct market access is not yet available here in Uganda. But ideally, in the real world sense of things, someone in Dubai should be able to buy shares on the USE from Dubai. You get someone in the US should be able to buy shares from the US on the USE, but that's not possible. They all have to go through the what? The brokers. Right now, that's typically how it's done. Okay. So this we have already finished. Now we move to the CDS. So the CDS is typically for bonds, okay? And how it operates again, I'll just walk you through like the same thing I did for the shares. You'll have to open up a CDS account with a bank. So right now there are 8 primary dealers that we have, the 8 banks that you can deal with. I don't know all of them in full. You can go and search about them, okay? But there are 8 banks. I think Stanchart, the top bank, Stanchart, Absa, and they also have licenses from us, okay? Absa, Stanchart, Stanbic, probably which are the ones? So the ones are there. Equity, DFCU, they add up to 8, okay? So you can, these guys are what they call primary dealers. Anything within this thing of financial markets, when you hear the word dealer, okay, those are the ones that they're the ones that invest in this what? In this product. Actually, there's a course. If you want to become a dealer, you have to do that course with I think it's with SCI, if I'm not mistaken, maybe Ivan can. There's a course for dealing. If you want to become a dealer with a bank, you have to do that course. Okay, it's offered by I think it's SCI. I think SCI or something. Be a dealer. So unless you are, so that's how the Uganda market is organized. Unless you have that certification, you cannot be a dealer. You have to do it. Then you get a dealing license. It's a license for you to deal on the desk of banks. Okay. In the US, they also have their papers that you do for you to deal securities. What in Uganda, we have what we call the CISI, Chartered Institute of Securities and Investment. In Kenya, they also have the same. Most people within this playing field, they have those 2 papers. They have done them. The first one is the regulation paper. No, first one is the introduction to financial securities and all this. Second one is regulations and market practices. So into those papers, then you're able to whatever. Yeah, not to deal, but to have some knowledge about the markets. Fortunately, now for some of us now like me, the course I did, it covered these things in detail. You get it? So probably you might have to do the now. Of course, for me, it's not really a must. But if you're dealing on behalf of the public, you must do it. Something like how you have CPA. You get? Yeah, that's how it operates. ACI, yes. ACI, so that's for the dealing. So to become a dealer, you have to do that. And of course, the reason why I bring it up is since we are dealing with government bonds and treasury bills, that's very important. On the other arena for the shares, they have to do that CISI. Okay? Yes. In other jurisdictions, other big countries, they even now for us it's just level playing field. Just it's like the basic minimum that people should have. In other countries, you may have to do almost 7 papers, 8 papers, and they are very tough. Okay, they're not very tough, but you have to do them. They're like licenses. Otherwise, you can't be able to what to deal for the public. So for Uganda's case, they have just introduced those 2 papers: CISI, Chartered Institute of Securities and Investment. First one is the regulations paper. Second one is a paper for introduction of these instruments, right? You know them basically. Can explain to the public basically what they are and what, but only also because your client facing, the client needs to know what they're investing in. You get? You don't want to be there. You're guiding someone, but you don't know what you're talking about. You get? That's why you have to do that. What that paper. So generally, just in general terms, what's the process of investing? Yes, CFA is there, but that's ideally up to you. We don't tie CFA in any of the regulations. We don't. Kenya, they tie CISI, the 2 papers I told you. Uganda now also CISI, the 2 papers I told you. By 2027, if someone who has a license, we have 2 types of licenses. We have a license for the company. We have now like Old Mutual. Old Mutual they have different types of licenses. They have the license as a company, as a broker dealer, Old Mutual. But then they also have representative licenses. For you to represent Old Mutual on behalf of the public, you must have done those papers. If you haven't done them, then you can't hold that that license. That's how it. But it's going to be effective in 2027. For now, they are giving them time for them to what? To do the papers and pass them and get the what? CFA, we all know CFA. Personally, for me, I've not done CFA, but I would advise to do it. It's important because now for me, I did my master's. But I would advise to do it if CFA is really good because it's the gold standard within this space. Yeah, but even still, you can do a CFA, but even for you to be an accountant, you still have to do what? The CPA, not so. Same thing, even in the US, you have to do their CPA for you to practice, a practicing thing. CFA, not really. It's really just for you to get abreast with how those financial markets work. So now, this CDS, the Central Securities Depository, it's in full, it's a central depository system. Okay, and how it works is now we have 2 things. There's the system, and then there's the account. Okay, Central Securities Depository, and then you have the system. The system is the CDS, the Central Depository System, and it works the same way how the ACD system works. When you buy bonds, when you buy T-bills, that's where they are what? They are stored. So how's the process of setting up the account? You have to go to the bank, okay? You can go to the bank, which is typically what most of these entities advise, but you can also go to we have some licenses that also you can go to. You can go to Old Mutual to buy a bond. You can also go to Crested Capital, it's another company, you can go to them. You can also go to a company called Diane Player. You can get their details on the same website. When you go to them, they'll walk you through the process, of course, for a fee, okay? Now, when you go to the bank, you tell them, I want to buy a bond. Can you guide me? Then they will give you that form, you fill in the form. I've ever filled in them. Now, for me, I try to go through StanChart because that's where I have my account. But when I approached them, they did the same thing. They gave me the form, but I didn't do the bonds and all that. But that's what they did. They gave me the form, then I had to fill in that form. When you fill in the form, you send it back to them. And then when you want to participate in the bonds and treasury bills market, there will be an auction. When the auction is there, the dealers are the ones that deal for you from the different banks. They will collect everyone's money, the bonds they want to buy, and then they go on that platform. I think it's also a system. Then they will what? Transact. Now that account, usually it's your bank account. When you send money from that account to the system, that money is the one that will be used now for them to what? To buy the bonds for you, to buy the treasury bills for you. Now with bonds and treasury bills, let me first start with bonds. Bonds, right now we have I think a 3-year, we have a 10-year bond, and then we also have a 25-year bond. So with bonds, how they operate is when you buy a bond, you're going to get a coupon rate, rather coupon. Coupon is just like a payment which you get, okay? So if maybe you have a 3-year bond, it's offering maybe like 15%, okay? That 15%, you're going to get it every year. Split it, but you get it twice in a year. So you get 2 payments, okay? If it's maybe a payment of 13% divided by 2, that's about what, 6.5%. You get it the first time, the second time. But then there's also a tax. Bonds and T-bills are taxed, okay? They are taxed. For bonds, I don't know what the tax, Ivan, what the tax is for T-bills. But for bonds, I think it might also apply maybe the 20%. I'm not too sure, 20%. But for bonds, it's 20%. That is if you're buying a bond where the bond is less than 10 years. The reason why government charges 20% withholding tax is because they want to encourage people to buy the longer term bonds. But 20% shouldn't bother you from investing because it's on your interest, not on your capital. So when you do the whatever, 6.5% on that will be your first whatever. If you've invested maybe 1 million, what's 6.5% of 1 million? 65 what? 65,000, yes. 65,000, that's the first coupon payment, okay? Then you also have the other 65,000, okay? So you have to apply your tax on those payments, 20%, okay? 20% of 1/3 is how much? So you do the math. I'm not saying calculate it now, but you do the math. That's going to be your net income. That's the money which the bank sends what? To you, okay? Actually, no, wait. It will first send you for that first payment, that first coupon payment. This is what happens. Your 130 on your 20%, half of that is what the bank sends to you at the first payment. Because for them, they apply the tax on the actual, on your final whatever. They don't apply it at 6 months. They will apply it on your final amount for the year. So which means 20% on the what? The 130. So you split that in 2. Half of that is what you get after 6 months. The other half is what you get after what? Another 6 months. So which means at the end of the year, that's how much. You do the math again. I'm just showing you how much money you get in your account. There might be some bank fees. I'm not too sure. There might be some bank fees, but that's typically how much money you're going to get into your what? In your account when you're dealing in government bonds. So if you're holding to maturity, if you buy a 3-year bond, you're going to get 65 first year, 65, that's for 1 million. So the money keeps increasing, okay, as whatever. So it depends on how much money you have. Okay. Yeah. So when you send your order through, the bank will handle the order for you. They will buy the bond for you. When you buy a particular bond, that bond is going to be updated in the system. It will show maybe this person has this type of bond with this maturity, and that will be the CDS system where it will show. And you'll even have a unique number attached to that system. Okay. So when you sell your bonds, some people want to sell their bonds before. We have what we call the secondary market. Okay. Secondary market is for someone who wants to sell a bond before. You want to sell it before the maturity period. You get? That's for the secondary market. But there are some things, maybe I can just speak of them very, very briefly, that you need to know when you're dealing in the secondary market. Because the bond prices change, okay? The bond prices change. I think, first it's a surprise from him, but I think you're going to have someone probably who's going to speak on the interest rates. But just to speak briefly, if you sell your bond in a secondary market, it's possible to make a loss. You get on how much you sell it at, because especially when it comes to this arena of bonds, when Bank of Uganda issues bonds, okay, it issues maybe a bond say this year, and then the interest rates reduce, okay. It means that the prices of the bonds that were previously issued will increase, because the newly issued bonds are offering less what? Interest, you get it? So it means that, okay, that's for who are buying, right? But now for you who's selling, you're making more money, right? Now that is for the case where Bank of Uganda is reducing the interest rates, because bond prices and interest rates are inverse. They are opposite each other. You get lower interest rates, more expensive what? Bonds. Higher interest rates, less expensive bonds. You get. So which means if you bought a bond during a period of low interest rates, and you're now trying to sell it when Bank of Uganda has increased the rates, becomes a problem. They are not so, because it means that your bond is not attractive. You get people who would have been jumping for your bond, they're now looking for what? For other bonds that have higher interest. So that's the thing now. And the decision for you to either buy or sell a bond in a secondary market, it's best to use again, when you're dealing on this, you have dealers. You cannot deal on bonds on your behalf. You have to go through the dealers. So they will advise you. The banks, I think, are positioned to advise you. I don't think banks want you to make losses. You get. So they will be able to advise you on that. Okay. But what I'm trying to say is, when you buy a bond at auction through a dealer, you can sell it before what? Before maturity. Okay. And the procedure for all that, again, like I've told you, but when your lecturer gets somebody from Bank of Uganda, they will give you a deeper dive, but just for you to know how the interest rate and the bond price dynamic works. Low interest rates, into the future, more expensive bonds on the secondary markets. Then high interest rates, less expensive bonds. Yeah, or unattractive, there will not be a lot of whatever interest for your bonds. Now, how long does it take for you to access your money after you try maybe to sell a bond in a secondary market? You sell it, you receive your money within 3 business days. These are okay, working days, okay? Businesses or working days is still the same 3. That's why they're saying settlement of what? Of 3 days, okay? Then they're also saying that the CDS transfer securities from a seller to a buyer upon confirmation. That's in the secondary market. We're now in the arena whereby you're now dealing in a secondary market. You have bought a bond. You're now instructing your bank to sell you that bond in the secondary market. When you sold your bond, maybe you've sold at a loss, you sold at a profit, whatever the amount is, based on your initial investment of maybe $1 million, that money will what? Will go to you. Yeah, and the BOU CDS system is SWIFT compatible, which means, I think, in the world right now, we use the SWIFT system. Not so. The only country right now that's using the SWIFT system is Russia. They removed Russia from the SWIFT system, so which means if you're sending money to a Russian, you can't use what? They have their own system. They removed them from COVID. It was one of their sanctions. They removed them. I don't know if they put them back, but every other country, I don't know if the other countries, those countries are the ones that have sanctions. They removed them. Russia, I think maybe probably North Korea also. Get sending money to North Korea and you can't use what? The SWIFT system. Probably maybe you have to use crypto. We know crypto. Crypto, I think they allow it outside, but SWIFT, they don't. So SWIFT means Bank of Uganda can pay you directly, I think. Because it will send money to the bank, then the bank, I think, immediately, but you will see Bank of Uganda there. Only that they have gone through the bank, because that's where your account is. It's not your own account to the bank. So they will send it to you. Your money, your full capital, if you're selling your bonds in a secondary market, or if you're getting your coupon, same thing also. When the money comes in, you will see that thing. There will be some information showing there, Bank of Uganda, something. It's normally a code, you see it. Yeah. So that's it about the systems. Again, we've just discussed systems, so we don't have to talk about them. Maybe just to say the electronic systems, okay? Orders are matched but they are matched and then they are filled. Again, there's efficiency. Efficiency, we're talking about, we have what we call the counters, okay? That's for the shares. Every share has a counter, okay? So most of the counters we have in the exchange today, the Uganda Securities Exchange, they are active and efficient. What do I mean? If you guys are a room of buyers and sellers, all of you are willing to buy and to what? To sell. That's how the market is. There's a few counters like maybe British American Tobacco, where the price is very expensive, no one is willing to buy. You can imagine one share of British American Tobacco is 13,000 shillings. One share, okay? Then you have a share like Bank of Baroda is just 50 shillings. You're seeing that very big price difference? It means now, not even, okay, for the average Ugandan, 30,000 is expensive, but even for the high net worth, 13,000 is, they will not be able to get a lot of what? Shares. So that's the thing. But you have very few shares like that. For most shares, they are liquid. You can buy today, someone will be willing to buy from you when? Tomorrow, okay? Then for the central depository system, the bonds and the T-bills are electronically held. That's why we said earlier, you have a unique electronic number attached to your what? To your account, okay? Then we have transparency. Transparency ties from the regulations perspective. CMA has access to the systems. CMA can audit your accountants, right? Auditing, what does it mean when you audit? You're looking at the system, not so. They will look at random transactions. Sometimes the CMA does what we call mystery investing. CMA can decide to mystery invest in Old Mutual just to see, from a perspective of the public, what is it like when a random Ugandan is investing? Will they give me all the information I need? How will they treat me when I'm investing? Are they going to, if I call and say, I'm following up on my deposit for the unit trust, someone may say, don't call follow up, you give it time, you get. So CMA does that undercover, you get. So if they be like, oh, okay, we have taken note, Old Mutual, this is how it works. It handles its what? It's not information that measures. They don't do that. All our licensed entities, they what? They operate well. They don't give people hard time. We don't have any issue with them. But just a random, let's say like a random what? Service provider. Okay, thanks. A random service provider will have mystery investing. So CMA they will send in a whatever for that. Then they'll have a mystery, they will do mystery investing in a bond through maybe Old Mutual. And these people won't know. They usually don't know because there's a way how they do it undercover. Okay, all that is for. Then again, security of the transactions, you're checking how secure are the transactions, the passkeys and all that. So all that is tied into. Yeah, I hope you guys are taking notes. Yeah. Then now we move to, we're actually making a lot of progress. Let's move to, we need to move faster. Let's move to blockchain. Now for blockchain, blockchain is just a system, okay? The system that powers, there's a difference between blockchain and crypto, okay? Blockchain is just a ledger system, okay? It's a ledger system, and it records the way transactions are recorded. They're recorded in that blockchain system, okay? And it's decentralized. It's not centralized. That's the beauty with a blockchain system. So in the arena of capital markets, what's important to know and where the discussion is or the trend, it's more in stable coins, okay? Okay, there are three things that we look at the capital markets. Stable coins. So there has been some talk of possibly the capital markets making guidelines, because typically how regulations work, when CMA wants to regulate a new area, they don't just jump and say, okay, you can invest now. No, they first start with making guidelines. The guidelines are supposed to evolve. The final document you have from when it first began, most of these regulations you have, they didn't just wake up and there were regulations. They first started with a document, guideline. Guideline is a basic document that even you can understand, or you can understand. anyone else can understand. It just explains typically what that product is, how that product operates, the process, what are the checks for that product, and also it also, I think it finally talks about what else does a guideline have. It also has, I think, some ways CMA can regulate it. Okay, it's just a basic document. So CMA, whenever it's going into a space, it first starts with a guideline. So there has been discussion of possibly whether we can have guidelines for tokens. Okay, stablecoins is more for banks. I'll come back. Let me first focus on CMA. Tokens. This case, go and search about that case. It's a court case, and there was a ruling, court ruling on it. August, who knows XRP? Anyone? Anyone who knows XRP? There was a ruling by the US. So the XRP and this is the CMA of US. It's called SEC, the Securities Exchange Commission. The SEC, I don't know who to quote, but I think that you go and read about that court case, okay? That the main issue in that court case is XRP a security, okay? Security meaning a share. Should it be regulated? XRP went and said, come and buy tokens, okay? So by calling people to come and buy tokens, almost like a public offer. So SEC said, what you're doing is what? Illegal. You're supposed to be what? Regulated by us, because you're telling people to buy shares. They are calling them tokens, but they are what? More like shares, okay? So they had a long court battle, and they gave a final ruling, 2025, and XRP won the case, okay? XRP won the case. They said that actually tokens are not what? Shares, okay? So there's that discussion about it, you know? There's that discussion about yeah, XRP won the case. I remember the ruling was in favor of what? XRP. But there's that evolving discussion about should we in the future regulate companies, but when you're regulating them, how do we look at them? We have to look at them as shares, and if we're looking at them as shares, how should we, what should be the necessary regulation attached to it or guideline attached to it? So that's typically the discussion. Then when you come to stablecoins, right now payments, okay? Payments, the banks have been looking at how can they integrate stablecoins in their systems. That instead of sending someone money through wire transfer, can't you just settle them through stablecoins? As long as the price is pegged to the value of the Uganda shilling. One UGX coin is one UGX per shilling. I've repeated myself. Or one UGX was 1 shilling, one Uganda shilling, okay? So there's that discussion. In the future, maybe license fees are going to be paid using stablecoins. The CMA will maybe have to, I don't know, probably maybe have an account that's tied maybe to the government account that's a stablecoin account, I don't know. But that's the future, okay? To help with efficiency in terms of how quickly payments are reached parties, how quickly license fees are paid, how quickly maybe penalties are paid, because CMA receives money for penalties. So that's where the future is going regarding that, okay? But you can read the case as a very, very long case. You need to find out what helped XRP win. Maybe there are ways it's set up, okay, that would have maybe made it appear like a public offer, but when it's not, okay? Yeah. Then opportunities and challenges of blockchain, again, it needs a lot of regulatory compliance because it's, again, a new space, and there's not a lot of jurisdictions. We have, tokens, again, are not regulated anywhere. I think maybe, okay, wait, I think in Dubai they are, and some of these other places with very lax regulations. You can go and, buy tokens from such jurisdictions and you won't have any issue, but it's still a new space here in Uganda. And I think Bank of Uganda recently said that investing in cryptocurrencies is what? Is illegal, okay? Okay, you can invest, but if you invest and you lose your money, that's up to you. Remember, cryptocurrencies are very volatile. They lose their value very quickly, okay? Yeah, so it could also be a way of financial inclusion. maybe like how we have maybe mobile money. Mobile money has helped a lot of Ugandans to access the banking system, because they save through mobile money, but they can also now connect their mobile money to their what? Bank account. So it has helped with financial inclusion, because initially we couldn't get people to bank. So now mobile money has made it easier for Ugandans to bank. You bank on mobile money, which is easy, then you send your money to your what? Account. So maybe stable coins. I don't know, but now there's mobile money, then there's stable coins. So there's also that. Which one will work better for people? Because stable coins needs internet. You get? Mobile money doesn't need what? Internet. So there's also that. So depending on which one, people will find it easier to use. Yeah. So now quickly, I'm going to go through the financing options. Raising money currently in Uganda, you can raise money through debt financing. That is through corporate bonds and commercial paper. You can raise money through private equity. Private equity is just raising money from private investors. Okay. The different ways you can raise money to start a business. You can get money from family or friends. Okay. The second biggest place where you can get money is what? Private equity. Private equity, you get money from what they call angel investors. Angel investors are people who invest in a particular sector. Okay. And for them, it's not really that they are investing because they want to. Okay, no, those are different types of investors. You have angel investors, are just investors focusing on a particular sector. Okay, and they also focus on private equity because they don't, when they're investing in your company, you're not a listed company, you're not a public company, it's a private company. Okay, and so why private equity is important in capital markets is because angel investors have made it easy for companies to, they don't only invest, but because they understand those businesses well, they will be able to help those businesses develop. Who knows a show called Shark Tank? Who has ever heard about that show before? Shark Tank. Look for it. It will help you to understand private equity better. Shark Tank is just like how you have, there are these big investors, US billionaires, most of them. But these guys are private equity what? Investors. They will get entrepreneurs to come and explain to them the product. What they do, what they call a pitch. They'll give you only what? 5 minutes. They don't give you 5 hours to explain your business. 5 what? Explain how the business is making money. Explain like who your whatever's are. You'll explain what else. You will show your product. And by the end of 5 minutes, they have said, I'm asking for 5% of the company for $500,000. I'm asking for 2% of the company. No one asks for 2%. Normally it's 5% and above. That's private equity. And some of those businesses have been able to eventually become what? Become what? Public companies, to get listed on the what? On the stock market in those countries. Because of what? Private equity. So private equity is very important. This is important to know. It's very important in the area of capital markets. Okay? Because through private equity, businesses are organized. Those Shark Tank people, they don't just give you your money, then after they just watch you enjoy your money. No. They will keep involved. They'll even ask to be, because remember when someone invests, if they ask for 40% of the company, they become a what? Part of the owner. So they will go through your records, your whatever's, they will organize the company, they will organize the operations and all that. So by the time this guy will say later after 10 years that, you know what, I'm going to exit your company, but I want you to pay me what? $5 million when I'm exiting. Is that okay? Well and good. They exit. Before Umeme became a public company, it was all fully what? Private equity. There was a South African company called Actis. Actis said they're going to sell. But when they sold, Umeme went on to the what? The exchange. So you will find small Umemes out there that have not yet what? But it's because of private equity that they what? You get. So private equity is very important. You talk about capital markets, you talk about it alongside what? Private equity. But look for that show, Shark Tank. You'll be able to understand private equity better. Then you have public markets, okay? You have public markets. Public markets. Maybe just to say, in the US and in some of these developed countries, Many of the big companies we know, KFC. Who knows KFC? We all know KFC. So if you read the story of that man of KFC, KFC didn't just wake up and the guy was on the what? Stock exchange. There are people who invested in the what? In that business. I can tell you about McDonald's. McDonald's, most of you think McDonald's is a food company. It's not. McDonald's is actually a real estate company. It owns most of the places where its restaurants are what? The land on which most of those restaurants are seated is actually McDonald's what? Land. You get? But before McDonald's became that company, it had people who were just go and search about McDonald's. There were angel investors that invested at that point. But now McDonald's is a what? A public company. So you cannot, for most companies, they can't become public unless they have gone through what? Private equity. So it's very, very important. Yeah. And actually, private equity investors do the work for CMA. They do the work for CMA. Why? They will organize the companies, put them in order, check them, do all these things. Then they will invest in them. So and that's what CMA is supposed to be helping companies. So they do it for us. Then when the company becomes big, then you just tell them, you tick all the boxes, you just join the what? The exchange. Okay. Yeah. So you can raise money through corporate bonds, commercial paper. Commercial paper is under 1 year, corporate bonds over 1 year. This is just raising money through the capital markets, okay? And we'll look at the processes for that. For corporate bonds, you have to submit an information memorandum. An information memorandum essentially is a document that should sum up your business. Normally for corporate bonds and commercial paper, there has to be a business plan, okay? The business plan is important. I don't have to explain that. You all know what a business plan is, not so. It has to show that the business plan normally has the marketing plan, financial plan. What other plans are there within those plans? There are many whatevers summing up the business. And then CMA needs to understand what it is that your business does. Is it a profit-making business? That's very important, okay? Do you have a guarantor? Very important, okay? Because, again, this is debt, okay? The guarantor normally has to be a financial institution. Now, how you get a financial institution to be your guarantor is what? Is also hard work. By the time the institution backs you up, the bank has to back you up. It means that your credit worthiness needs to be very what? Very solid. Most times, even for individuals, your family member can guarantee you very easily. But again, even for your brother and sister to guarantee you, it's also not what? Easy, especially if your credit worthiness is a what? So that's that. Then minimum paid up share capital and reserves. That's a requirement. Then you also have 1 billion maintained at this level during that period. The debt is is outstanding. So they have to keep 1 billion there. I think probably as a reserve or as share capital among the owners of the business. It has to be there as the debt is out there. Okay, just for purposes of what? In case maybe the corporate bond issuer fails to what? Fails to pay. Yeah, that's then again the financial guarantee for the debt. Then weighted average of the funds. I think that one you know it. The different whatever's where their money is, because there's a cost of capital structure, not so. So they have maybe some of their money in a bond, some of their money in shares, some of their money in what. So a portion of it, the minimum of the money which is in maybe redeemable bonds or maybe money which they have put maybe in what? In debt. It shouldn't exceed what? 40%. Okay? No, sorry. It shouldn't exceed. So not 40%. 400%, I think, of the company's what? Yes, shouldn't exceed, I think, 400%. Yeah. Then minimum 40% of the three. What's this? Minimum 40% for the 3 accounting periods preceding the issue. No, this is it. That's the debt. That cost of capital, okay? That structure of cost of capital, I think you know it, which has maybe like where the company has its money, okay? Maybe some of it is in equity, some of it is in maybe a bond, some of it is in what? Of that structure which is there, 40% shouldn't be in what? Beyond 40% shouldn't be in debt. Reason for that is because they are highly levered, like the company, even when you're getting loans from the bank, they will tell you, the moment, especially like a salary loan, the moment there is what they call good debt and bad debt. If you're servicing, if the money which you're getting no income, and of that income, maybe more than 50% of it, actually for them, it don't reach 50%. The moment 30% of it is of your income is going into paying loans, they say they refuse you. You get, that's how banks, because now remember, now you imagine you earn 1 million, you're using 700,000 to pay loans. Are you able even to survive? So how are you going to survive? Because Ugandans are highly indebted. That's why many of them are going to what? They can't even step in a bank. Bank, those ones only deal with credit-worthy people. You get? That's why mobile loans is easy. But bank account, that's where they say. You get? Me personally, I'm currently servicing a loan with Stanchart, but the amount I'm paying, the amount I'm paying to the bank monthly is less. I think it's about 5% of how much I earn. Should be less than 5%. It's a tiny amount of money you get. So which means, and the bank tells me, you come and get more, I could probably maybe even like get so much you get. But now when I get so much, still it will reduce how much I can what. So that's the same thing. The same thing applies to these people. You can't be indebted beyond a certain percentage of your total capital, your cost of capital. You get. Otherwise, it will become a problem to pay to service your debt. Okay. Yeah. Then a minimum issue size, again, I think you're saying 500 million. That's very, very high. That's why typically now I'll tell you that for most companies, they have to go to, for most companies, we have where we tell them to go to, which is the, I don't have it in the position, but we are working with financial sector deepening, okay? Financial sector deepening, it's a bit like private equity, like what private equity does. They organize a business, they what? So it's much less. That's why you find here raising money for most people is a problem because it's very, very high. That's the minimum issue size. So if you're issuing a corporate bond, you have to start from what? 500 million. They don't allow anything what? Beyond that. For commercial paper, I don't have the amount here, but I don't know, I didn't get the amount here, but commercial paper, there's also a certain minimum that it has, but the minimum is for what? For corporate bonds. Yeah. Then what else have I missed out here? Yeah. Then the work that I've already gone through, the weighted average cost of capital shouldn't what? 40%. The amount which you're holding in debt should not exceed 40%. I've already gone through private equity. So public equity financing is again when investors, early investors want to exit from the companies, when now they want to move to a new company. Okay, maybe he bought MTN when MTN was just starting, was a startup company, and now he wants to move from MTN to move to. Yeah, if maybe he wants to exit, companies exit on the what? The stock exchange. Okay, that's like Umeme, Actis Capital. When there's a company called Actis Capital, it's a private equity firm. When it was selling its stake in Umeme, after selling its stake, Umeme got money and decided to go where? To go on the what? The exchange. Okay, that's how these markets work. And when they go to the exchange, they do what is called an IPO. IPO is an initial public offering. Okay, that's when the company is raising money and it will issue a prospectus. Okay, the prospectus was in one of these things. A prospectus or an information memorandum is something that explains the business. The business story should be captivating as an investor. You open the book, you're like, oh, this is MTN's journey from when it began to where it is now. Is it worthwhile to invest in? Yes. Okay. So that's the document, which is and the prospectus, that initial public offer, when they give you the prospectus, in that prospectus, it also has how the company has performed its financials. Okay, we shall look at the details there for this thing. Okay. It will also have what other things does the prospectus have? It also has what else? The story of the company, the financials, the management. Okay, what the company plans to do with your money. Remember, it's the IPO. It's raising money. So yes, if I'm coming for money, what is the business plan of the business, the roadmap? within the next, normally it will have maybe 10 years. Over 10 years, this is how MTN intends to grow, to divest its maybe mobile money business, to do what, to not do all these things. So, and I don't know whether the public read that document, but that document is mostly for the large investors. They need to make sure that they're investing in a what? Proper company. For us who are investing 1,000 shares, 2,000 shares, might not really, as long as no it's empty, it's strong, you put your money there. But for other guys, for them, they go through the fine print. Anyway, I think you guys are all accountants, not so. Me, I'm not an accountant, but you're an accountant since you're doing your CPA. So I'm sure that it's important. Again, there are those things that are important when you're going through. They will go, maybe they will get the accountant to go through the financials, be like, okay, is this business actually doing well? Or, yeah, things like that. So what are the pros of going public or becoming a public company? Here we are saying, people have dropped off. I think maybe time. Okay, let's try and move faster. Access long-term capital. When you raise money through the capital markets, you're able to do so much. If it's maybe a sugar factory, they can set up so many, factories with the money they've gotten from an IPO. If it's maybe a telecom company, they can maybe set up new data infrastructure. Okay, for maybe they can maybe do fiber optics. These underground cables. If it's a soccer team, there are soccer teams that are listed on the exchange. Some of you don't know about that. You only watch soccer, but you don't know the companies are owned by public companies. Okay, maybe the soccer team might want to open up a new stadium, or it maybe want to do whatever it is that they want to do. Yeah, increase brand awareness and market reach. That's important. There's a gold standard of being a public company. The moment you are a public company, even to a foreign investor, it's already easy for them to what? Invest, because they know that for you to become a public company, you have to be what? Regulated. Okay? So let's move faster. Let's go to the listing criteria. So for you to list, this is the criteria. So we have two listing for you to become a public company. You can either go on the main market segment. We call it the MIMS. So the main market segment has the big companies, MTN, Airtel, Stanbic, Bank of Baroda, Quality Chemicals, DFCU, Uganda Clays, National Insurance. That's on the main market segment. So the company, your company needs to be a fully registered company with a register of companies, URSPs, and keeps that records. And the company needs to be limited by what? Shares. Okay. Then the paid up share capital must be 1 billion. Whatever you split up among the shareholders has to be how much? 1 billion. Okay. Minimum net assets of how much? 2 billion. Okay. Positive profits in at least 3 of the last 5 years. Okay. Audited IFRS compliant financial statements of at least how many years? 5 years. Should not be in breach of any loan covenants. Okay. Now again, this speaks to what? To transparency of the company. The moment a loan covenant has been breached, that's a sign that trust has been what? Breached. So which means that how should we give you an approval to hold money for the public? You've already breached the what? The loan covenant. Okay. So that's a very, very important thing. So they have to ensure that in case they have been in any kind of loan arrangements, they must have met all the terms and maybe payment dates and all that of those loan covenants. It's a very, very important, whatever that one. Then immediately after IPO, at least 20% of the shares are held by at least 1,000 shareholders. Okay? So those are the listing requirements for the Uganda Securities Exchange. And then we have the GEMS market segment. GEMS market segment is for smaller companies. Not many companies have assets 2 million plus, 2 billion plus. There are few. Okay? And these are valued assets. You're not talking about, not saying the other building is mine, the other whatever is mine. It has to, of course, and now, yes, it has to be properly documented. There has to be a proper record of that. Probably maybe the assets must be valued and they must be up to date, and that information must be submitted. It must be, I think, notarized, you know, and you know, the copies of whatever document submitting must be certified and true. Now you have the James Market segment. Now, James Market segment, they make it a little less complicated for you to list. Here, your company listed by shares, but the difference there is that you don't have any minimum what? Paid up share capital. You're seeing it? There's no minimum. So even with 50 million, you can list with whatever. There's no minimum. It's clear there's no minimum. Then no minimum net assets. Okay. So remember, I need to put a caveat there, or this disclaimer. That decision for you to get listed must be approved by what? The authority. So much as they may say no minimum, that doesn't mean when you have zero, you go there. You get? Because remember that there's what they call the discretion. The authorities are discretion to either approve or what? To disapprove. And they decide based on the available what? Information. Yeah. So no profitability track record required. Again, at the authority, we have the supervision department. That is, supervision department has financial analysts. They will analyze your company, they will value it. And even in the fine print of listing, we have what we call a transaction advisor. Transaction advisor is the role of those people. They will value your company. Do you understand when they say valuing a company? I think we understand. Like the balance sheet, they come up with that. The assets, the liabilities, the income statement, you know, they will have to put every single document that they can get on a company there, and it has to be disclosed. So that's the information they need. The authority does not just decide on hearsay. Just go there and say, now look here, I have assets. They are not here. There's no document here, but they are there. I can point them out for you. We shall go there and show you this. No. There has to be documentation. The transaction advisor will guide you. Normally, we have a licensed transaction advisor who will guide you to make the prospectus that speaks in detail about the company. So this one may be no, but those are the caveats that are there that you need to submit. Then profitability track record, here the authority will be looking at, yes, maybe for the past 5 years it's been tricky, but probably maybe, you know, a business may make a loss, but when it's actually still what? Operating well, not so. In terms of, your accountants is where you can tell from the financials, from how it's, they will speak to you. The notes, maybe the auditor has put there, they will maybe speak to you based on how the company operates, you know, the revenue, which are the revenue items contributing to the bottom line of that company. Is there a hope that, you know, the company will turn around a profit? Because if it can, then that should speak to the possibility of the company, what? Yeah, growth. That's why they call it growth, what? Yes, they help it to what? To improve. Share ownership structure, there are no requirements for those, but again, it's at the disclosure of the what? Of the authority. Yeah, so I think that's it. That brings me to the end of the presentation. I'm sure the group must be busy with questions. Oh, okay. Yeah. So I hand over to your lecturer. Yeah. Thank you.
Let's give another handover prize to him again. So guys, in closing, we sincerely thank our guest speaker for giving us this knowledge. The insights were valuable, and we hope we all benefited from them. We appreciate everyone who has attended and contributed to the session, and we want to wish you all the best. Unless you have any questions, do you have any questions for the guest speaker? Any questions? Guys online, do you have any questions?
Mr. Ivan,
Okay. Yes, please.
there's something I wanted to know about there's that last stage of matching. If they match,
Hold up.
We also have a license as a fund manager. All mutual managing funds for some pension funds, MTN's pension fund. When I say pension fund, I'm saying money for staff. So they manage money. Some of the pension funds we have, it can be maybe MTN. That at Uber has those records. It could be MTN. Many companies, most of these corporate companies have what? They have their own internal NSSF. You get? You remember there's NSSF, the general one, the one where your money is deducted goes. Then there's also the internal one, the internal NSSF. So they manage that money. That's a fund manager. Then they also have a unit trust manager. Unit trust manager for these unit trusts. Those collective investment schemes, they have that license. Then they're also an investment advisor. So they hold many licenses. I think more than 4 licenses. Yeah. That's Old Mutual.
Someone was asking a question online. Can we get, do we have any other questions? I think we are good to go. As someone said, throw more lights on ETFs.
ETFs are exchange traded funds. So in Uganda right now, we only have the Tolea ETF. Tolea ETF is purely a bond fund, and with it, it has what they call a net asset value. Okay, that net asset value keeps increasing and decreasing, and whatever percentage that it increases by, that is how much interest you get on your on your investment. So that's how it's structured. And right now we only have one ETF. But if you want to invest in ETFs outside Uganda, you can also do that through one of our licensed firms. It's called Gold Catch. You can invest in ETFs in, yes, even NASDAQ, there's an ETF for it. To invest in those, you have to go through Gold Catch. You can find it on our website. You can check on our website for our licensed, the licensed firms. We have many of them. You can go to the CMA website. So the CMA website has those funds. So Gold Catch, they are more like they are fund manager, but they deal. We give them a license for them to allow Ugandans to invest outside Uganda. So there are those ETFs, and they all offer different percentages. Okay, yeah.
Guys, any other question? All right. So we come to the end of the session. There is a question? Okay, okay.
USD is a securities exchange. It's a primary securities exchange in Uganda, and we give them the license. Currently, they have a license. As they are also a self-regulatory organization, by the way. So self-regulatory organization in such a case that they can come up with their own internal regulations, but they still have oversight of what? CMA. So they have that license. We give them that license recently. But aside from that, they are regulated by us, okay? So we regulate them as a stock exchange. And we also regulate another one called, USD has a commodities exchange, but there's not much I can say about this. It's still really very nascent. It's still a new space, but eventually the idea is you can actually buy commodities digitally as a derivative, okay? So for instance, maybe maize is being traded at 500 shillings. You can buy maize, but not the actual maize. You buy like a derivative of that maize. So it's still in early stages, but soon there will be that electronic dealing in those products. So that's the commodities exchange. So it's still a new space, but USE is a licensed stock exchange. And to invest in USE, rather invest in shares, you go through the Uganda Securities Exchange, but you don't just go through them, you still have to go through a what? A broker. Through that process I told you about of the sponsored market what? Access. Yes. So the Tolea ETF I told you about earlier, the one was about the ETF, is not on the USE. For it, it's on the what? Altex. That's the other exchange we have. Now, Altex, when you're going to trade on Altex, you can trade in bonds and you can also trade in what? That Tolea ETF. It's not a very liquid market. There are not a lot of people trading in ETFs in Uganda, but it's there just for knowledge purposes. And you can buy and sell. You can sell that ETF to someone else. Okay, ETFs are bought and sold, bought and sold, bought and sold. Yes. Yes. Yeah. Okay. For those, I think you're talking about derivatives. You're talking about derivatives. Those things of buy euro USD, buy pound dollar, buy gold, those are derivatives. But currently, there's no license for them in Uganda. So if you want to invest in them, you invest in them, but the regulator is of that country. Yeah. But they are derivatives, whereby if maybe the price of gold, 1 ounce of gold in a real market is $2,000, even on that exchange, it's going to be at what? $2,000. Yeah. But the way you make money on them is also different, because with them, with most of those brokers, they are not cash-based brokers. With them, they use margin. So there's also a whole different world for that one. By cash, I mean you're buying at 100 shillings, it increases by 400 shillings, then you're making 400%. That's cash. Now with those brokers, you invest, you put money there, maybe like $100, but what you trade with is more. They give you more what? Margin. So that's how they whatever. But we don't regulate them in Uganda. In Kenya, they're regulated, but even in Kenya, their regulations are very, very basic regulations. They regulate them there as you're the one who trades on your behalf. The Kenyan brokers don't trade for you. But in more developed markets, they can trade for you. You get, they call them big book brokers. There they will trade for you, but yeah. But in Kenya, you trade. CMA gave a license only for them to trade. You trade. If you lose money, it's on you. You don't blame the what? The broker. Broker only gives you the what? The opportunity to trade. They give you the system. Yeah, that's how the regulation is in Kenya. But probably also here in Uganda, it can still be duplicated for Uganda's market. The only thing is that in Uganda, we have not had many brokers coming to Uganda. Most of them are online. They have not come physically. Yeah, if they come physically, then that's how they will be regulated like that. Yeah. So I was showing you Gold Catch. Gold Catch is regulated here. If you want to buy ETFs in the US, someone was talking about NASDAQ there. You can go through. You can go through Gold Catch. Okay, it's somewhere. You just look on it. Okay, it's here. So this is Gold Catch. So you can invest through them, and you can also invest in this fund here, and you can access funds that are both. But of course, this is for high net worth. If you know that maybe you're seated on $5 million, you can invest through this this entity here. Okay, their representative is Standard, so you have to go through Standard and ask for this person. Then they can be able to. So there are many brokers. There are many ways you can invest, even beyond Uganda. You don't have to invest only in Uganda. The difference between a bond and a bill, a bond is a longer term financial security. You're looking at above 1 year. So 2 years, 3 years. In Uganda, we have 3 years, we have 10 years, we also have 25 years. Treasury bill is short term. Look, typically its maturity is 1 year and below. Yeah. Yes. Now, yeah. That's what I was talking about is forex trading. People call it forex trading, but it's actually derivatives trading. You get it? Yeah. If you go to a forex bureau and you buy dollars or buy pounds, it's the same thing you're doing. Only that for you, you're buying something that gets its value from something else. You get it? So people who are doing forex trading, they are buying maybe Euro USD, which is a currency pair. You get it? So Euro USD, it gets its value from the real-time value of a dollar vis-a-vis a euro in the actual what? Market. But for you, what you're betting on is the movement of the what? So it's a derivative. Forex traders bet on movements of whether it's moving up or down. You get it? So in that up or down movement, they look to make a what? A profit. That's how forex trading works. So some lose money, some make money based on how they apply that strategy. Of how can I determine whether it's moving up? Some people gamble forex trading. Some people are actually professionals, depending on how they approach the markets. Yeah, but it's a regulated business in other jurisdictions. It's a regulated business. So there are trading strategies, I think, that apply to forex trading. Yeah, and like I said earlier, it's a margin-based trading. Margin-based meaning when you access more margin from the broker, it means that your capital which you use to trade is actually more than you deposited. You get. But if you're using a lot of margin and if you're using a lot of margin, if you use a lot of margin and your risk is high because there is margin and then there's leverage. You get it? Margin is how much the broker gives you based on your leverage. So if you're opening up very big positions for your the initial amount that you have there, okay? Some people can access margin, okay? Say for instance, maybe you deposit $1,000, the broker gives you $10,000, okay? And you're opening up maybe a trade of that $10,000 you've gotten. Your margin which you're utilizing maybe is about 5,000. So which means the moment the market moves, just a few movements, your 10,000 is gone automatically. You get? Because of the capital which the broker has given you, you're using most of it in just one what? In just one trade. That's where many forex traders, that's how they lose their money. You get? Because they are using a lot of capital more than what they're supposed to be using for their size of what? Account. So that's one. Secondly, many of them are gamblers. They look to make money in the short what? Term. Yet in real investing, you actually make money over the long term. Yes. The same principle applies even in forex trading, because there's no one who is on your case that you must quickly, whatever your money, like get your money. No. You can open up a trade with a broker and hold it even for 5 years. The broker will charge you the fees. You will not be stopped out. Yeah, unless it's a futures position, because futures positions expire. Okay, but these normal ones, if you're trading on trades that are not future trades that don't have an expiry date, you can hold it even 5 years, 10 years. You can hold. It's like a real investment. Yeah, so it's that. Yeah, but for most traders, they gamble. That's the truth. Most traders gamble. Yeah, most gamble. They don't, because they're excited by the money. How quickly they can what? Yes. Yeah. But trading is a real business. Yes, it is. And it works the same way the way this business works. Yeah. Yeah, cryptocurrency again, it's same thing. It's also, now cryptocurrency is even worse than the other whatever. Now cryptocurrency also same principle applies, and I think probably you're going to look at it during in the course of technical analysis. You will see there's what they call swing trading. Many fund managers, when they're holding your positions in stocks, they hold them for years. You get? They're holding them for years. So there is beauty in timing, in time. Over time, businesses do well. Over time, investments do well. Even in trading, the same principle applies. Even with crypto, you get. Most crypto traders, they want to make money fast. You get. They want to make money fast. But crypto is also volatile. Crypto can't work as a currency. In its nature, it can't. Because currencies are supposed to be stable. That's why Bank of Uganda cannot allow Ugandans to buy and sell in Bitcoin. You get? You imagine imagine if I'm receiving money from you. I have a restaurant business and I'm receiving money in Bitcoin. Today I received this much of Bitcoin for this many clothes or for this much food that I sold, but the total amount of money I received in UGX terms is maybe 500 million, 5 million. Tomorrow, because Bitcoin has reduced and I didn't sell my Bitcoin, the 5 million is now how much? 500,000. You get? Yes, that's how cryptocurrency works. That's why it can't be a what? That's the reason why Bank of Uganda can't. It's not that Bank of Uganda is against Bitcoin. I know there are different people in Bank of Uganda who are holding Bitcoin. Maybe they are making money, maybe they are losing money on their Bitcoin. That's up to them. But as a bank, it can't because a currency has to be stable. That's why Uganda shillings is a currency. It's stable. People who are buying things from China for their shops, they're not going to wake up today and because the Uganda shilling has weakened so much, they need more shillings to keep up buying. You get what I mean? They need to be able to buy every other month simply because the currency is stable. They will be changing to the Chinese money, but the Chinese money is not too what? It's also stable. You get it? But now imagine if every other month they have to spend more shillings to buy more clothes. You get it? As a country, now there will be chaos there because now people won't be making money. That's why Bitcoin, how regulators are approaching Bitcoin, they want the technology of what? Of Bitcoin, but they're also interested in the stable coins. Stable coins are not like Bitcoin. Stable coins, for them, the value stays the same. You get it? It's not volatile. Yeah. So I know people out there on social media will tell you Bitcoin is good, but over time, people who bought Bitcoin then are the ones that now are in money. If you bought 2009, 2010, but if you're buying it now, yeah. There is you just search about a hedge fund there called MicroStrategy. Search about it. There's a gentleman called Michael Saylor. That guy is actually a case. His case is very interesting because he used on his balance sheet he has Bitcoin, but the Bitcoin which he has, he's currently in a loss of 2 billion from his purchase price. If he bought, I don't know how much Bitcoin he bought, but the value of how much he bought is now in a loss of $2 billion. If he realizes his profit is, if he switches it back to dollars, he's going to be in a loss of how much? That's a lot of money, you get it? And now that company, he owns a company called MicroStrategy. MicroStrategy deals in these IT things, networks and all that. Now, Michael Saylor used the money for that company to buy Bitcoin. So now, ever since he bought and now the price of that company and Bitcoin have been falling together because almost like they have become what? One. You get, they have been falling. Now that company has lost value over 70% value because he bought Bitcoin and because of the perception. Anyone who has shares in that company, okay, no, not shares, the short sellers, there's what they call short sellers. They look at MicroStrategy and they tell themselves, what? This one will sell this what? Company based on the perception. And now it doesn't look good because the fundamentals are showing that Bitcoin is going to keep what? Falling. Now, if it keeps falling, this 2 billion of annualized loss is going to increase to what? It could even collapse the company. If it collapses the company, that means, yeah. So that's the thing. That's why, and he keeps buying. I don't know what his strategy is, but hopefully, because it's a bet, and I hope it works in his favor. But at the moment, it's in a loss of 2 billion. That's already huge. Yeah. So that's a bit about cryptocurrency, and that's why cryptocurrency, it's very hard to regulators to regulate it. Yeah. If Museveni went crazy and said that I've cancelled Uganda shillings, I've cancelled what? Dollars in Uganda, we're going to use Bitcoin. It could be a problem. It could cause chaos because everyone will lose money. People who are selling splash, their splash which they have gotten, today they have made sales of 5 million. Tomorrow the splash which they sold in Bitcoin is 2,000 shillings. That's how volatile it is. Yeah, so they're holding Splash, no, they're holding Bitcoin, but if they change the Bitcoin into, because remember, Bitcoin is not the final currency. You hold Bitcoin, but you hold it in dollar terms, in UGX terms, based on the currency you exchange. You get the final currency which you use here is Uganda shillings. Not so. Even if you have dollars, you can't do. Okay, dollars you can do much, maybe hotels and some places, but for most it's Uganda shillings. Yeah. But now you imagine you're holding a lot of Bitcoin, but the value is down. So when you change it to UGX, it's in a loss. Yeah, that's why Bank of Uganda said Bitcoin, no. Yeah. And they're right, by the way. They're right because yeah, you just check on online. This information is online. You'll see what people are saying about Bitcoin. Okay, so I think that's a bit about cryptocurrency. Any other question? I think that's it. I don't think it's some questions in there. Yeah, I think that's it. No more questions.
All right. Once again, let's give a final round of applause to our speaker. Guys, thank you so much for attending. Let's meet next Thursday and Monday for those who are doing advanced financial management, and Thursday for those that are doing financial management. Thank you so much, and have a blessed weekend.
So this is microsecond. That's it. Think about this microsecond. So now, the average cost of the Bitcoin you went for the company is how much? Average cost was how much? 76,000. When you come and search here, so remember he bought it, when average cost, I think you understand. Average cost is every Bitcoin he bought it at an average of what? 76,000. Now when you come and search the Bitcoin price, you can see how much Bitcoin price is in dollar terms, okay? In dollar terms. And this is the company's Bitcoin. So this money could have gone to something else, but the man said, come and do it. What? Now it's showing us in what? In UGX. But we're interested in what? In USD, not so? So USD is where? United States. So you see. So if he bought, you do the math now. He bought, right now he has 70. That's what? He has 771,000 Bitcoins in oh sorry, I'm supposed to share that one. He has 771,000 Bitcoins, right? At an average price of 76,000. That's how much? It should give you in dollars how much that is. How much is that? 58 billion. Now you get that 700,000 Bitcoin. Multiply it by this one here. This is where the Bitcoin price is now. It's now 68,000. Then you get that initial amount and subtract from that. That's how much is in loss of. You see that, eh? Yeah. And when you look at the Bitcoin chart over a period of 1 year, it's still updating. It's what? So how he's going to manage, I honestly have no idea, because this money is in a balance sheet of MicroStrategy. This is MicroStrategy's what? Bitcoin. It's possible that he can bankrupt the what? The company, whereby, like, they'll have to, I don't know, they'll have to keep managing the loss. I don't know how they'll do it, but it's something maybe to keep watching. So, you can just go and read about it. Right. Okay. Thank you.
Jesus Christ.